Welcome to the WyldLyfe podcast. This is your host, Jess Hayes. I'm here today with Dom.
Thanks for having me, man.
So, today we're going to be talking all kinds of different stuff from the stock market all the way down to Dom and his personal, doings throughout his life. So, how old are you, Dom?
How old am I?
Yeah.
I am 16.
16 years old.
Yeah.
And these articles that I pulled up of you through the Columbus Dispatch, the Record Courier, and a couple other websites that all did practically copy and paste each other's information pretty much.
Yeah,
is what it looks like.
It's all the same thing, really. It's nothing.
But
nothing
this says 2018. You were 15 at the time. I mean, that doesn't make sense, but that's what it says.
Yeah, I think so.
Like
I'm about to be 17,
gotcha.
So it's like, yeah.
All right. So in these articles here, it's talking about how you started pretty much your own video game. Now, Roblox as a whole, that's a whole video game, or is it just like a server where there's multiple video games in it?
You can think of it as kind of like a publisher. I don't know if you're familiar with like Steam, but it's a Steam equivalent for like a younger audience.
Gotcha.
And it's memed a lot because of how goofy and like childish it is.
Yeah.
In its nature, but it's pretty much Steam. Like they give you all the assets you need, and then a platform to program or whatever. And it's a good option for young people.
So how many programs have you made before you got this one, A Very Hungry Pikachu, to blow up? How many did you program before that?
For the longest time, I considered myself software, like a programmer.
Yeah.
So, kind of started off like 8 years old. I was like trying to figure out how to make a website. So like basic like HTML tags, like head, body, title, throw a cool like flaming text GIF on there, and like, oh, I'm so proud of myself.
Yeah.
It's always kind of been there. But then I started playing Roblox itself in 2011. So I don't know how old I was, probably like 9 or 10 or 8 or something.
Yeah.
I started playing it, and then as a joke in 2012, or I think it was 2013, somewhere around there, I made a game on there. And it was whatever. It was just kind of as a joke. I didn't actually like see it. Like I didn't foresee the events to come where people actually, when they played it, they responded well and they played it for a little while, and I noticed that. So I ended up marketing it, and it blew up, kind of.
Yeah.
I remember when it hit like 1,000 plays. And then I started to monetize it, and thank God I did.
And how do you monetize something like this?
Well, it's free to play. I could make it pay to play, but I don't think that more like it. It's good to have a free to play. It's a better business model for smaller video games. Like if you have Call of Duty, you can charge $60 because people are already kind of familiar with your brand. But when you have a small video game with low demographic, like 30, 40,000 people playing a day compared to Call of Duty, which is much greater. It's good to have it free, and then once they play it, if they like it, they can continue to like buy points or buy extra items in the game. It's in-game purchases. They call it microtransaction business model.
Gotcha.
So that's kind of what I adopted.
Now, on this article, it said something about you seen that a famous YouTuber of some sort, or a famous streamer, was playing your specific game mode. Do you know the name of that YouTuber or that person?
Well, basically, like how that all went down, is like it kind of blew up, I would say. Not blew up. It was just sporadic growth. Like basically, like the way like life works, as most people will find out, is like once you start to find a little bit of momentum, everything kind of gets a little easier from there.
Mm-hmm.
So I got a little bit of momentum, and then from there, one YouTuber, like these are pretty much Minecraft YouTubers, people who played Minecraft and then uploaded it. They would play the game, and I noticed like as like a smaller, like not small, but like 250,000 like subscriber like count
That's
Minecraft
still solid.
YouTuber, like they would play the game, and then I would see other smaller YouTubers play the game. And then it eventually led to, I don't know if you're familiar, Dan TDM played the game, and he's like huge, like 20 mil subscribers or something.
Really?
I'm not too sure on Dan TDM's like counts or anything, but he's like the top Minecraft YouTuber. He played it, and that was pretty good. That helped out.
Let me search him. Let's see what he has now.
Yeah, he's I know he has a lot of Twitter followers as well.
So Dan TDM, I'm assuming that's like team deathmatch sort of deals, because TDM usually means team deathmatch.
Yeah.
But right here, he's a this is 7 months ago, is what it's saying. He had a video that he dropped of a Minecraft survival mode, and he got 7.3 million views. He has 22.5 million subscribers, so that's crazy. And he was playing your game, and you were just a little bit of background about yourself. Were you born in Ohio?
Yes.
Raised in Ohio?
Yeah, it was
in this small town for most of your life?
Yeah.
And then you have someone with 22 million, or probably more with all of his other accounts. I'm talking all of his other social medias, but just on YouTube, 22.5 million subscribers, and he played your game. I'm gonna try to search and see if I can find when he was playing your game. That'd be pretty sweet.
Yeah, it was pretty wild. Pretty wild. It was established. It was an income, but it wasn't anything significant. And then once you have not only him, but so many other YouTubers providing exposure on top of the ads I was already running for it. I mean, that's that eliminates costs, and it's kind of exponential.
Yeah, but as a 15-year-old, and you're in your sophomore year when all this went down, that's like you said, that's an income. That for a 15-year-old is probably a pretty good income out of the outcome that you got for your video game. Have you tried producing any more content on this video game, or just try to make a new one, program something new?
It's in the works.
I'm
trying. It's a lot harder. Trying to find something that demographic. It's mainly demographic of like 8 to 10-year-olds playing this. So
yeah.
And that's the users of the site are 8 to 10. And I no longer play Roblox, so it's like,
Gotcha.
It's kind of hard to make something you wouldn't enjoy yourself playing. But basically, like, I'm trying to find some kind of concept that will work again. And it's really hard to find that formula because this is, like I said, I made it as a joke.
Yeah.
And by chance, I noticed that people enjoyed it, and it was a model that worked, and I just kind of ran with it, and I'm still running with it, and kind of doing other things on the side to kind of build up multiple income streams instead of just kind of relying on that one. So yeah.
So on the side, you have stocks, correct?
Yes.
So we're not going to get too much into detail. We'll keep it pretty anonymous, but overall broad view of stocks, they're pretty bad right now with the virus, right? They're all kind of dropping.
They are. It's kind of all I have a Wall Street Journal subscription, and for the past maybe month, that is all the Wall Street Journal is just coronavirus and stock market crash, and we're down I think 30% from our peak high. Basically 2008 hit, right, and over leveraged mortgages caused 50%, I think it was 30 to 50% decline in the majority of the financial markets. And ever since then, after 2009, we've had this big bull run. So there's a bull and bear market, right?
Yeah.
So bull is when you're going up, bear is when you're going down. We've had this huge bull run, record highs, record total time, and now it's came crashing to an end here in 2020. And a lot of people will argue it's not a recession, but I think we're going to come to find out that this will last for 2 quarters at least.
Yeah.
The adverse economic effects, because it's going to affect spending whether you like it or not. I mean, like businesses are closing, small businesses. People are. I think Bank of America came out and said that they think the unemployment rate's going to double. And it's kind of hard. I'm no economist, so I'm not too sure on all this, but I think we'll rebound. Stock market will rebound eventually. I'm a big bull on America as a country, but it's kind of hard to tell how long it will last.
So what's your cutoff for other people that might have stocks? Most of them are probably selling them off and just getting out while they're still maybe possibly in the high, or even a couple weeks ago when they were still right before it started dropping, they probably sold out. You think people should bite the bullet and wait, or if someone doesn't have a stock, should they buy now, buy in when it's low, or should they wait a month and buy in, or is it really just only time will tell?
Yeah, that's a good question. I mean, it's a really hard question because it depends on the person who's asking. All right, and I'm no licensed advisor, and I've only been in this for maybe 3 years.
Mm-hmm.
But I do know quite a bit. And what I do know is that if you're 60 years old and you're planning on retiring soon, definitely go the more conservative route. But if you're like me or you and you were young, you're able to take risks. So do I think the market will reach new highs again? Absolutely. I mean, if we don't, that like 30 years down the road, we're thinking long term.
Yeah.
Like if like stock market hasn't reached the records it's already reached, then we have more to worry about than what the stock market index prices are, rather than like where's our economy at that point? It's like it probably look like a war zone. I'm not too sure. But there's Japan. Japan is their stock market started to decline quite a few years ago, and it's never rebounded. But the Japan is kind of like far below us on the economic scale, so like I'm a bull on the country. But
Yeah.
as far as like I guess what your question was is should people buy right now? I think if you're depends on what your risk is, what your risk tolerance is. I have a pretty high risk tolerance. I can take a lot of risk. I went into this knowing that I was going to lose money
Yeah.
potentially, and I'm kind of like I'm very long term. So if you're long term like me and you can take a risk, I would say sure, invest in an index fund. Um, that's probably the way to go as far as retirement goes. Yeah.
So on this app here, we'll move this to the side. You've heard of Cash App, I'm assuming. Most people of our
Yes.
generation have heard of Cash App. So when you go to Cash App and then you come to this right here, and it says stocks or investing your money, what are these stocks considered?
I see McDonald's, Visa, AT&T, Nike, all that, Coca-Cola. Yeah,
And
Apple.
everybody talks about Coca-Cola stock. It's also going down over the past week.
Yeah, it's a famous Warren Buffett pick. Warren Buffett, I think, owns like 5 or 15% or something like that. Those are called blue chip stocks.
Gotcha.
They're seen as low risk because they're very established. Like, here's a Coke right here. Like, there's no alternative for there's Pepsi, but like, Coke will let's face it, it's not going anywhere.
Yeah.
It's Coca-Cola, man. So it's like, so that's what a blue chip stock is. And like the widespread kind of fallacy that people follow is that blue chip stocks are never going to go away, and that's not true. You can look at Enron, you can look at IBM. I mean, if you look at IBM, if I say IBM right now, you guys probably you kind of like yeah IBM, but it's like IBM like 20 years ago, they were the big dogs. Now they're just a consulting company, and it's they were the big dogs, and now we have Apple. And a lot of people are like, oh, buy Apple. It's never going to go down. But it's like, well, how much room does Apple have to grow? It's and stock price is driven by a multitude of factors. But when it comes to investing, I think a lot of people fall into these apps, like at Cash App, which is comes from Jack Dorsey, who started Twitter, and Robinhood and M1 Finance and
are
Webull.
these safe? These are safe apps, I'm assuming.
They put themselves out to be safe. They're not FDIC insured. I'm not too sure about that. But Robinhood is another famous, or not famous, but just well-known stock trading app, and they do options and everything that a lot of millennials use and younger people use. And they recently crashed due to the high volatility of the markets this past week. They crashed, which is not good if you have short-term plays that you want to have quick turnover rates on your trades. You don't want to have a platform that crashes.
Yeah.
So I personally, if you want to get into the investing game, find a brokerage, which is basically like a bank. Not a bank, but it's like they do all of the investing for you. It's not a broker as a brokerage. So it's like Vanguard, TD Ameritrade, Fidelity, Charles Schwab,
Gotcha.
companies like that. You give them your money, and then you tell them, you can go online and pick whatever stock or bond fund you want, or
So right here, I looked up what the longest stock decline was in the U.S., and it says that this is Dow Jones Industrial. This is off of Wall Street Journal, which you said you have a subscription to, and it says that the longest ever bull market for U.S. stocks just ended Wednesday.
Yes.
20% decline.
Yeah, there's a lot of crashes that we've had. You can look at, I think it was 1987, I think. 2008, 1929. We have all heard about these.
Yeah, this is 2008 right here.
And basically, they all have their own reasons, and some of them are known as black swan events, which is kind of like, oh, I didn't see this coming. Nobody could have seen this coming. Is a black swan event. And I think that this is a black swan. Some people beg to differ, but this is a black swan. Like, nobody knew this virus would happen. except for the virus, right? So um, basically, every crash has its own reasons. So 1929, it was high levels of people irresponsibly uh, margining margin investing. So they're borrowing money and investing it, and that never ends well when everybody's doing it irresponsibly. So there, after that crash, we learned our lesson and we implemented rules on margin investing, and we were more strict on it. And after 2008, what was that? It was just irresponsible mortgages being lended out to people that pretty much shouldn't have mortgages at a non-fixed interest, and all of that came crashing down. And we learned our lesson, and we had fiscal stimulus, and we were fine. And after this, we'll by the end of it, in hindsight, we will figure out what went wrong, and we will adjust accordingly. I think we'll be fine.
So, what's your
hopefully.
what's your personal input for the projection you think that this will come back up to, normal standing?
As far as time goes, it's really hard to tell because that's like kind of what this virus has created is a whole lot of uncertainty.
Yeah.
In every area known to man. I mean, like, I'm in high school and we're closed now. I don't have to go to high school because of the virus, and I never saw that. I've been tracking. I don't want to like render some kind of hindsight bias here, where I'm like, oh yeah, I've known about this but like I've been tracking the virus since January. Like there's a site. There's a site. I think it's by John Hopkins University. I think it is. It's a map of the world, and there's red dots for every confirmed case, and it updates, and there's numbers: mortality, recovered, confirmed rate for the virus. And I bookmarked it in January when it first entered the financial news, and I didn't think it was a big deal, just like most people. And I think that stems from the low mortality rate that they put out at first, which was like 99%. Plus the unconfirmed case. So the mortality rate at first was really, really low, and it seemed very not so deadly. And then also the fact that it was in China, and we didn't test anywhere outside of China in January. Everybody sort of thought, oh, Chinese people, they're the whole like the kind of, I don't want to say racist, but kind of prejudices. Against China. Oh, they eat things that we don't eat, and it's probably just a Chinese thing. Well, now we know that's not so much. That's my thought. I was like, oh, it's just a Chinese thing. It's gonna be contained in there and whatever. But then they shut down Wuhan, China, and then it's like, okay, well now it's kind of obviously something's going on there, and they didn't just shut down Wuhan, China. They told the people in Wuhan, China, hey, we're gonna shut down in 12 hours. So what did 5 million Wuhan Chinese people do? Or I don't want to say Chinese, that kind of sounds bad, but what did 5 million people living in Wuhan, China do? They moved out. That's not good. So now they kind of seeded the virus, and it's in different areas. And then, I mean, that's the spread, man. It goes from 1 to 2, 2 to 4, 4 to 16, 16 to 256 to 65,000. Like eventually this was, that's just how it works, exponential.
When you first started kind of watching this back in January, did you see any articles that were saying that this was a virus that could only be passed from animals to humans? Because that's what they originally thought. They originally thought that this was an animal to human virus only. If you ate the certain animal or you came in contact with the right, fluid of this animal, you could get the virus, but you couldn't get it from another person, is what they believed. And then scientists were doing research to see if maybe this evolved in weeks' time, if this virus has already evolved into a human-to-human virus, which if it evolved that fast, it's really, like you said earlier, it's really hard to tell when this will start slowing down, because if it's evolved once in 3 weeks, what says it can't evolve again in another 3 weeks?
Yeah, it's watching it from January to now, which I was wrong in January. I thought this would never be that big of a deal, which as it is now. And then I never thought school would be closed until the day it closed, and then I realized how big of a deal it was. Basically, if I kind of like think back, kind of have a hindsight view of what happened at the beginning, everybody kind of, all the major news outlets, so the first case was in November, is what they believe the first infection was in China, was in November. They reported it December 31st, and here we are now. The major news outlets got a hold of this January, which is like how I knew about it. And the big kind of attitude towards it was that, oh, don't worry about it. The flu is much worse. We should be worried about that. that's what a lot of the more liberal kind of news outlets were saying.
A
And
lot
I
of
don't want to
people
say
still say that.
yeah, and I don't want to say liberal, but more like tabloid papers would just kind of have the headline of, you know, it's the flu is much worse. Let's worry about that. This is not that big of a deal, and I kind of bought it. I was kind of a sucker for it. I was like, yeah, flu killed 80,000 people last year, and we're only at X for the coronavirus. So it's like, okay, it's easy. It's an easy to believe narrative. And then the NIH comes out, National Institute for Health, which I greatly respect. Lots of great people there, Dr. Fauci being one of them. And then the NIAID is a subdivision of that, and they're doing great stuff. They came out and said it's 10 to 20 times, or maybe 20 to 30 times more deadly than the flu. And then I'm like, oh, yeah, maybe this is as bad as it is. And that's kind of how the narrative has changed. It's went from the flu is more deadly to now it's you need to stay at home is what these tabloid papers are kind of like pushing. And it's kind of crazy to see how quickly it evolved. So yeah.
Swapping back, since this coronavirus went down, this is how high we were up, and this is Bitcoin. I don't know if you've ever tried Bitcoin or anything, but I know a lot of people that have. So when we go back to, even just to February, we were up almost $10,000 for a Bitcoin. That's for one single Bitcoin. Now we go down to just the past week. Now it dropped from the $7,900 for a Bitcoin about 10 days ago, and then it went all the way down in a single day, split in half. And then you come down to where we're at now, and we're actually already starting to climb back up a little bit just from the 18th, which would have been Thursday or Wednesday. That's $5,400, and then we're already back up almost $100 in 3 days. We're up to $6,200.
Yeah.
And this is just, obviously all stocks are different the way that they're going to fluctuate, but I'm just going off of Bitcoin because I actually know people that invest into buying Bitcoin. I don't understand what Bitcoin even is, but just watching this over the past week, I've kind of noticed that it is starting to climb back up very slowly, but it's getting there.
Yeah. So Bitcoin, there's different asset classes, right? You have equities, which is equity in a company. So you watch Shark Tank, and they're like, oh, I'll give you $10,000 for 10% of your company.
Yeah.
$100,000 valuation. They throw those numbers around. That's equity. It's percentage of the company. You buy a stock, you're buying the business.
Mm-hmm.
And there's lending investments, so bonds. You're borrowing money or lending money out, and people are borrowing from you. And then there's commodities, so gold, silver metals, precious metals, whatever.
Mm-hmm.
And then there's like cryptocurrency, which is Bitcoin, Ethereum, Litecoin. I think there's a Dogecoin. There's even a Corona coin. I think now somebody invented, and it's part of this blockchain technology. And it is in my opinion, I'm a very conservative. I stick to the old and faithful value investing philosophy. I don't like Bitcoin. I like the technology. I think it's great that we have it. But it's too speculative for my taste. Obviously when you're buying an equity, there's financial statements to back that equity and to give you kind of a reason to invest in it. When you're buying a bond, there's a yield. Like bonds and stocks are kind of different. So stock, you kind of don't really, but you don't have like the future. You're kind of predicting the future, which is a little ridiculous.
Yeah.
But if you have confidence, you can. Maybe you'll buy it or short it or whatever. And then with a bond, you kind of know how much money you're going to make with a bond. There's a set yield that can sometimes fluctuate, but you kind of know what you're going to make with a bond. And then with the Bitcoin, there's nothing to really back it. I mean, I don't want to say nothing to back it, but if you're going to buy a Bitcoin, you don't know where it's going to be tomorrow. And even if you say, okay, Bitcoin's going to go up 10% tomorrow, I mean, you have no reason to say that. And to some people say they're correlated with the markets. I mean, that's probably maybe sometimes true, because it's all about spending. If this virus comes out and unemployment doubles, like Bank of America claims it will, if unemployment doubles, not as many people are going to be buying Bitcoin.
Yeah.
So it's not a bad hypothesis.
How does people buying into a stock affect the stock? Like, say you have a stock here and they only gain 3 people that bought in the past, 3 months, and then you have this stock where 1 million people bought in a single day. How does that affect the stock and how it's going to fluctuate?
That's a good question. It's this is called trade volume. So it's if you take a look at short cap stocks, which are really kind of small companies. I can't like it's kind of hard to think of an example, but it's easier to think of an example of a large cap company or a mega cap company. Very large companies. These companies have high trade volumes. Like people are trading Coca-Cola all the time. People are trading Tesla all the time.
Yeah.
And this results in the stock being known as volatile. You know, the price fluctuates more on an hourly basis because so many people are trading it. When in contrast, you can have a really small company that people don't trade as much, and it's kind of, you know, it's not easier or harder to be right on an investment based on the trade volume, but it is something to consider as far as liquidity goes. But yeah, it's kind of something to keep in mind as far as risk tolerance goes. Is smaller companies are less likely to succeed typically. The median stock goes down. And then the whole stock market. So like, I don't know if you kind of like want to get into the whole stock market because there's like stocks and then there's a stock market. So the stock market, like what you see on the news, is the Nasdaq, the Dow Jones, S&P 500. I don't know if you've heard of it, but they're kind of thrown on the news like every now and then.
Pretty much the only one I've ever heard of all those is Dow. Like for some reason, every time I'm looking on like a certain website, if I'm on Fox 8's website or if I turn on the TV, it's always gonna have a little sidebar, and then like the first one I always see is Dow, just right there.
Yeah, so it's people like the news. They'll throw up Dow's down 500 points today. Oh my goodness. Nobody really knows what that means unless you're into it, but they just kind of throw it up there just in case you are. And what those are, they're stock market indexes. So if you're familiar with the term index, it's kind of like, I don't want to say average, but it's kind of just a good representation of where the stock market is. So the stock market's like all of the stocks, pretty much. So there's X amount of stocks in the U.S. for the stock market. So the S&P 500 is my favorite. It's a widespread favorite of many kind of newer investors. Basically, what it is the top 500 stocks in America by market cap. So it's the top 500 largest companies. And market cap is basically the cost to buy the company. So it could be $1 billion or $2 billion. It's just all of the shares combined. So it's the number of shares times the share price is your market cap. So I think the largest company right now is like Apple.
Yeah.
So that's what those indexes are. So when somebody says the stock market is down, it is in reality those indexes are down.
All right, so we're shortly running out of time here, but thank you for coming on today. I definitely learned a lot. We'll definitely talk more behind the scenes because I actually kind of want to get into something. I'm not in any stocks currently, but I've been thinking about it lately. And I hope the viewers got some good information today. I hope they're thinking about getting into stocks possibly, or if they're into, a certain stock and they're already investing, hopefully they don't bite the bullet and pull out and maybe kind of stick in it and see if they can come back to, when it starts gaining some more momentum going back up. But thank you for coming on today. It was nice talking.
Well, we should probably do the.
Gotcha.
We should do the L bump.
And for sure, we'll have you back on and we'll talk again. I plan on having every single person I have on. I plan on having them on more than once, just to see where they went with either their personal business or whatever. And then I just want to see in 6 months where they're at, and then maybe another 6 months see where they're at, and just keep checking in. So for sure, we'll have you back on.
Yeah, I'll come back anytime.
Thank you guys for watching the WyldLyfe podcast. Heading out.
Peace.